The purpose of the plan is fourfold, if I can say. First, to preserve the deposit in the banking system. Make sure to find a solution for them, a positive one. The second plan is to try to consolidate banking and monetary stability, as stated in the plan. The third one is to bring banks back into their economic role, to play an economic role in the economy in terms of participating in economic growth and economic stability. And the fourth purpose is to minimize the cost of the government when it comes to treating the deposits and depositors. The draft law stipulates that there are two types of deposits. Deposits before October 2019, and they call them qualified deposits, ودائع مؤهلة, and deposits after October 2019, and they call them ودائع غير مؤهلة. And then the qualified deposits, مؤهلة, they brought a figure of $100,000, they called it protected deposits. So these deposits are protected up to $100,000. The deposits that are not qualified are protected up to $36,000. Protected in the sense that people can withdraw from them. But the problem is that for the deposits that are qualified, people can withdraw around $300 to $800 a month for a period between 10 to 15 years to recover up to 100,000. The other ones between $200 to $400 up to $36,000. Now, any deposits in excess of the 100,000, not in a given bank, in the whole banking system of the depositor. So a depositor is withdrawing not from each bank the depositor withdraw. I feel the depositors are getting shortchanged, are getting the bad end of the deal, as is evidenced by the statement. If the bank is restructured, reorganized through capital infusion, merged with a foreign bank, or through capital from abroad, why should the depositor wait 15 years before recovering up to 1,000 or up to 36 if the bank has been recapitalized, reorganized, restructured? You would expect that upon restructuring, a shorter period will be available for the depositor to withdraw the fund. And then there is no ending of the period when the depositors would recover everything. But if the bank is fully recapitalized, restructured, why would the depositor lose anything? Now, with the 151, 158, the depositor is withdrawing $400 or $300, and initially some amount in the dollars, which is not in existence now. But so what's the difference? The same depositor withdrawing $400 may now be withdrawing $300. So either restructuring is not done properly, or restructuring is done to benefit the banks, not benefit the depositors. Their deposit that is protected, they call it protected, is up to 100,000. So small depositors, if you define small depositors, depositors having like $50,000 in all their bank accounts now because they have been surviving for the last years on withdrawing and paying fees and checks and so from that. These depositors would recover everything in 15 years if they have less than 36,000 in unprotected. They would recover, but with the purchasing power changing, very high inflation rate in Lebanon as measured in dollar prices, this amount will be reduced drastically, especially that depositors are not earning any interest on that. On the other hand, large depositors would be hit very hard, and this applies to all foreign depositors, non-residents, sending from abroad. These are, to a large extent, part of the large depositors, and how could they regain trust in the banking system when everything above 100,000 has been, in a way, lost or postponed, possibly to many years more than the 15. Clearly, they lost confidence, trust, and they will not use the banking system anymore. The idea restructuring plan is to first restructure without stipulating amount to be withdrawn and years and so on, because it's like one size fits all. All banks restructured, irrespective of the new capital, new ratios, by this law, can pay all of these amounts stipulated. Of course, somewhere in the law, there would be that the law can be changed, the amounts to be withdrawn can be raised. They don't say can be raised, but can be changed. It means they could be lowered, or the years can be reduced or extended. So clearly, it's not final. And in my opinion, it will not pass the way it is presented, because it doesn't give anything new to restore part of the objectives of the plan, the confidence in the banking system, the stability of banks in Lebanon, and the stability of the monetary system and financial system. Already, people are withdrawing this amount that they stipulate, up to lower limits, fewer years, but now you can withdraw in $300 a month over 2 years. You're withdrawing close to $7,000, $6,500. So in 2 years. So what's that new? Of course, if you multiply it by 15 years, then you reach these 36,000 and what they're talking about. So what's new? There is a need for more deliberation of the law to make sure that the health of the bank later on, so it become a bank-specific case. And it can't be one size fits all, because some banks are going to be liquidated. Then those that are not liquidated, why should they be all treated equally? Yani risk-based approach. Tie bank risk to bank financial condition. Why can't a risk-based approach be used instead of one size fits all for all banks? Some banks may merge, 5 banks may become one with capital infusion. Why should these people spend these banks 15 years to pay back up to, and the other amount is clearly not determined? So they are saying the banking system will never recover. So they are making some suggestions for people to recover a small part of what they have. And then it's the end of the banking system. I feel this law, the way it is presented, it's the end of the banking system, not the beginning of a new era in banks in Lebanon.